The Central Bank of Nigeria has suspended dividend payments to shareholders and bonuses to directors and senior management of banks currently under regulatory forbearance. The directive, issued in a circular dated 13 June and signed by Olubukola Akinwumi, Director of Banking Supervision, is aimed at strengthening capital buffers, improving balance sheet resilience, and encouraging prudent capital retention during a declared transitional period. We have Arnold Dublin-Green, Chief Investment Officer, Cordros Asset Management Limited. Great to have you in. I was going to botch that anyway.
Thanks for having me.
And we also have Stanley joining us, an economic analyst and founder, online banker, popularly known. Great to have you in.
It's great to be here with you, John.
All right, let's begin with you, Stanley, and I believe you're joining us from Abuja. Let's set the foundation. Regulatory forbearance, what is it, and why was it instituted in the first place?
So for the layman that is listening, regulatory forbearance, what the CBN did was just a relaxation of, the regulation for banks. It came at a point, this started off during COVID, when there was a lot happening in the markets for everyone that was around during COVID. There was a lot happening around the market. So the CBN said, for the people that were, for your loan books, for your profits, just, relax. Let's relax regulation for everyone. Let's get through this period. And that came into effect for a lot of non-performing loans, for people that they were not paying their loans as and when due. They give that relaxed period of time. Even the CBN reduced their own rates that they give to for intervention loans for everybody to have that period and go through that transition period. So it was just more of a relaxation of the regulation for a lot of the banks.
Right, and I guess relaxation is over 6 years on or thereabouts. So I'm coming to you now, Arnold. Mm-hmm. And of course, investors were somewhat swayed, or have been somewhat swayed, by the earnings, the big dividend announcements. Yeah. How are investors reacting to this news now, considering bank stocks, one of the biggest sell points is their dividend?
Yes, of course. Like you said, so Nigerian investors, stock investors, focus on dividend payments, and this whole suspension of dividends and bankers' bonuses sort of sent a message to tell investors to temper your expectations. So naturally, on the short term, everyone kicks back because, you're buying GTCO, you're buying Zenith because the stocks have amazing dividend payments. But on the short term, it's negative, but medium to long term, I believe investors understand that this is something that needs to go on in the system for financial stability and clarity on balance sheet. So short term, yes, there was a pushback yesterday, probably a little bit more today. But over time, on the medium to long term, we should see markets get back to normal, just to temper expectations a little bit.
Temper expectations. We know that earnings season is just around the corner. Course, yeah. What do you think will happen in the build-up to that? And,
well,
how can investors manage their expectations well?
So listen, we saw a season ago where we had GTCO pay for dividends. Zenith were disappointing, a little bit just below expectation, and everyone expected banks like Zenith and a few other banks not pay, good dividends. So there's going to be disappointments across, but we know that some of these banks are able to clear out this restructure or clear out these forbearance loans, hopefully by final dividend payments. So I think that right now everything is in the air. There's some confidence in some banks like GTCO, and we know it's going to be okay. FCMB released statements yesterday saying everything will be fine, and we sort of have some numbers in some of these banks, but we're also expecting that over time things should clear itself out.
And for Zenith, which obviously was the most profitable bank.
Yeah. And everyone, like I said, everyone expected a Zenith dividend to match a GTCO dividends from the last time. But we know that the restructuring is happening right now. We just think that, okay, whatever dividends you're expecting, just temper your expectations, I like to say.
All right. So temper expectations. I'm coming down to you, Stanley. And of course, right now, there are questions around, obviously, the banks. The Nigeria's financial reporting. There are questions around that. So, what does this whole scenario point to about Nigeria's financial reporting standards? And as well, what would you say are better indicators for bank performance?
So for financial reporting for a lot of banks, the CBN has historically done its oversight and has been very strict about it. For everyone that knows, the banking industry is a heavily and tightly regulated environment. So for the forbearance that came into effect, it came at a period, especially during COVID, to allow the banks, just like I mentioned, to allow the banks to have that relaxation. And it wasn't just in Nigeria, across board. In the US, there was a stimulus package that was released, and there was a lot of relaxation of regulation for a lot of financial institutions because there was stress on the system. But going forward, the CBN is just signaling that, oh, okay, we're taking a proactive measure just in case there is a shock on the system or a downturn that would stress the banks. There wouldn't be anything. So I would say that the financial reporting for Nigeria is still in line with the best standards. And this is just an action. If you look back at why this was implemented and what it is supposed to do, you will know that going forward, it's not a problem with regards to our financial reporting. Okay. So yeah, we're still on.
Okay, we are still on track, according to Stanley. And I would like to come to you now. You know, what are your thoughts on that? And as well, looking at the details, there are also concerns about heavy exposures. They're heavily concentrated. Some of these loans are heavily concentrated within one sector.
Sure.
That's the oil and gas sector. So what does that point to about the banks and, you know, their current credit structure?
Yeah, I mean, it shows that, like you said, a lot of the loans are concentrated in one sector. I believe it was mainly oil and gas and power, but oil and gas is quite heavy. But it does send out a message to everyone that you need to diversify to other sectors. I mean, oil and gas is Nigeria's bread and butter, so it makes sense to have this this single obligor or this exposure in this sector to be quite big. But yes, it's something that we all need to look at because, as Stanley mentioned, the forbearance came because of the macroeconomic shocks that could affect this sector. And knowing the macroeconomic shocks that can affect this sector, it makes sense for banks to actually diversify. So it does show that yes, there's heavy concentration in this sector, but diversification is definitely needed.
Do you also see this move affecting banks' lending capacity at a time like this?
Yeah, yes, definitely. I mean, because these banks have to make provisioning now for this, right? You know, I mean, they have to make provisioning for it. But one of the reasons the central bank is asking for no dividends and no bonuses is because they're asking for more internal capital retention. So rather than pay bonuses and pay dividends, the provisioning you make, get it from perhaps a shareholder equity, which affects dividends, and less from P&L, which would affect profitability. But yes, because they have to make provisioning for this, there will be an impact in lending capacity.
Okay, all right. And speaking of impact, I'm coming to you now, Stanley. Do you see the banks being well positioned to absorb some of these losses, especially considering, you know, we're bang in the middle, less than a year for recapitalization?
So historically, the banks that have been mentioned have shown capacity to attract capital. So that's kudos to them. And we expect in the near term, just like Arnold had mentioned, in the near term, we would experience that drawback and a lot of apprehension in the system. I'm sure the market has reflected that yesterday. But going forward, I expect the banks to be able to clear this. Some banks are already showing like promise to do that from now till year end, and looking forward to like the near term. So before the expiration, before the expiration of this period for, I expect the banks to be proactive, most of them to be proactive in clearing this. And there's going to be a lot of restructuring and I think aggressive recovery on the part of the banks to be able to make sure that this is put into like a final closure as soon as possible. So yes, I expect them to be able to handle this.
I'm sure they'll be scuttling right now to handle it. But how do you also see this impacting, you know, coming to you now, Arnold, their reported profits? How do you see that being impacted? Yeah,
so there should be some impact on profitability for some banks, especially if the provisioning comes from P&L. But the central bank is also encouraging them to have equity provisioning, so provisioning from shareholders' funds. Shareholders' equity rather, shareholders' fund. So if they do that, then it shouldn't really impact that much. But I think you'll see a change. So you can't say there will be no impact. You definitely see a change and an effect on profitability, especially on the tier 2 banks that are that might not be in place and might have a bigger exposure than your tier ones and your access or your Zenith or your GTCO.
And I think I'm happy you're talking about tiers now. Do you see gaps closing? You know, tier 2 banks shifting to tier 1 banks perhaps coming, or do you think they all have displayed so far the capacity?
I think some tier 2 banks, some tier 1 banks will be fine. They already have the forbearance loan to gross loan exposure isn't that much. You have maybe 4% in access and 20-something% in some of these banks, or 16%, 18% some of these banks, and 0 in banks at GTCO. So tier 1s will be fine. There's some worry in some tier 2s and lower tiers, which could be interesting to what might happen. I mean, normally when this happens across the globe, which it has happened, you saw it happen in India, for example. The forbearance loans given out to banks across the world, US, UK, India, and other countries. You saw smaller banks get they had to merge, or little things had to happen to tier 2 and lower tier banks. I'm not sure the impact on banks here, on those smaller banks, but you might see a bit of a shake-up, maybe.
Okay, and I mean, hopefully investors don't shake as much. Finally, Stanley, your final thoughts as well, especially with CBN and you know how they are regulating the sector so far, and even with this latest move.
So I would say the CBN is taking proactive measures. They are trying to take preemptive measures to forestall any stress on the system that could impact on depositors' funds. So I would give them kudos. And for the banks, I felt like this should have been something that would have been done looking forward, and kudos to people like GT that were able to get their books in order as a 2024 year end. So I felt like they should have taken these measures even way before the regulator came in. But it's in good light, and we expect that everything pans out as. So for everyone, for the depositors and for shareholders, it's not a time to fret. Just like Arnold had mentioned, especially for tier 1 banks, we still expect all of them to pull through this period, and we're back to life as we know it.
All right, so let's see how this all pans out. Of course, we'll be tracking all that and more. Thank you very much for joining us, Stanley, popularly known as online banker, Stanley Onuorah, economic analyst and founder. We also have in the studio, we've had in the studio Arnold Dublin-Green, Chief Investment Officer, Cordros Asset Management.
Thank you.
Thank you for joining me. All right, our next conversation, of course, we're staying in the investment space. This time, the green bonds being issued closes tomorrow, actually, so we'll have a conversation about that. Stay with us.